Have you ever wondered if it's really possible to start trading Forex with just $100? Or maybe you've thought to yourself, is this even worth it when I barely have enough to open an account? Well, today I'm going to show you exactly how you can start trading Forex with just $100 in your pocket. And more importantly, I'm going to give you a step-by-step strategy to help you grow that small account into something much bigger. For example, imagine you start with $100 and follow the exact steps I share in this video. You might make your first trade using a high-leverage broker and grow your account to $200 in just a few days. Let's say the price action aligns perfectly, and you identify a support zone on the daily chart. After switching to the 4-hour chart, you see a solid entry opportunity and you make a move. Within a week, that $100 could turn into $300. And this isn't just a theory. I've seen traders do it time and time again by applying discipline and smart risk management. Trust me, you're going to want to watch until the end to learn how you can make this possible for yourself. Let's be honest, starting out in Forex with just $100 is tough. It's not a lot of money to work with, and it's definitely not enough to turn into instant wealth overnight. But you're not alone if you feel like that's all you have to spare for investing right now. The reality is, many people are in the same boat, wanting to see if they can turn a small amount of money into something significant. And that brings us to a harsh but important truth. Trading with $100 is more like a gamble, and you have to be okay with taking higher risks if you want the potential reward. However, the key to making it work is to approach it strategically and with the right mindset. For example, there are traders who started with small amounts and managed to grow their accounts by being patient and disciplined. One such trader began with just $100 and focused solely on high-probability trades, choosing pairs with strong trends and clear support and resistance levels. By risking no more than 10% of the account per trade and aiming for at least a 2.1 risk-reward ratio, that trader was able to slowly but surely grow their account over a few months. It was an overnight success, but with persistence and proper risk management, that $100 eventually became $500, and from there it continued to grow. This shows that while it's difficult, it's definitely not impossible if you stick to a plan and keep your emotions in check. If you're going to trade with a small account, you have to accept that you're playing a high-risk, high-reward game. It's important to set your expectations accordingly. This isn't about steady, low-risk income. Instead, the goal is to grow that $100 to $1,000 as quickly as possible so that you can eventually trade more sustainably. And to do that, you'll need the right broker and the right strategy. First things first, to trade with $100, you need a broker that allows for high leverage and small minimum deposits. One broker I personally recommend is Osprey FX. They offer leverage up to 500.1, making it possible to actually move the market with just $100. With low deposit requirements and easy connectivity to MetaTrader 4, it's perfect for getting started without much money. But remember, leverage is a double-edged sword. It can magnify your gains, but it can also magnify your losses, so you need to be careful. The strategy, using high time frames to your advantage. Now, let's get into the strategy. To make the most of your $100, you need to trade smart, and that means starting on the daily chart. Trading on higher time frames like the daily chart is ideal for small accounts because it allows you to target bigger movements in the market. You can trade with smaller position sizes while aiming for larger profit targets. Start by identifying key areas of support and resistance. For example, look for zones where the price has historically bounced. These are your potential buy or sell zones. Once you've found a good support area on the daily chart, switch down to a 4-hour chart to fine-tune your entry. Using Fibonacci retracement for entry points. To increase your chances of success, use Fibonacci retracement to identify good entry points. After identifying your support zone, wait for the price to make a higher high to confirm that the market is moving in your favor. Then look for a pullback into the 38.2% or 50% Fibonacci retracement level, which often aligns with the support zone. This is where you want to enter the trade. Place your stop loss just below the support zone to manage risk, and aim for a reward that's twice the size of your stop loss. By keeping a 2-1 risk to reward ratio, even if you win only half of your trades, you'll still be profitable in the long run. The reality of high-risk trading. Let me be clear, this strategy is high risk, and you're going to be risking about 10% of your account per trade. That's a lot, and if you lose 10 trades in a row, your $100 will be gone. But if you want to see if you can grow a small account into something bigger, this is one of the best ways to do it. You're trading with the trend, using larger time frames, and leveraging smart risk management to make it happen. If you're ready to take your first steps into Forex trading with just $100, feel free to drop your questions in the comments below. I'd love to help you out. Keep learning, keep practicing, and stay motivated. Happy trading!